Hi, everybody. Good afternoon. This is David Huff, CPA with DW Huff Consulting, bringing you the September 22nd, 2023 edition of News from the Front Lines of Business, where we try to help small business owners and investors in real estate build, grow, and enjoy their wealth. So here we are, Friday once again upon us. If you were paying attention, last week I did not record anything as we were dealing with the just the general hecticness of that September 15th partnership deadline. But here we are back at it, talking to people, doing our thing. And here's what we have discussed with some of our clients this week that we think you'll find useful. First up, on our net worth. So we're always, we're talking about financial planning and some of the challenges that come along with building up your portfolio. And it's worth mentioning again, and I know we've talked about this in the past, but getting to that first $100,000 mark. So, it's hard, I guess, because as everybody's distracted with all the things that are going on in their lives, and sometimes focus on these financial issues gets a little hard. But the reason why this came up, we're looking at clients' tax return, family money. So they had an intergenerational transfer, and they had done pretty well over the years, right? So as time kind of went on, these investment portfolios really acquired a lot of assets in them. And as I was looking at this return, I just noticed that there's a bunch of money in dividends, a bunch of money in interest, a lot of capital gains, right, from real estate sales, a lot of rental revenue, right? And this person, I'm not saying they didn't work hard, but they didn't work as hard as the first generation, right? So by having this base of assets, it's like the person just can't stop making money, all right? So there's so much there going on, and with the passive investments generating what they do as far as income goes, it's a lot easier to make money when you got some assets, right? So once again, that just brought that I guess to the forefront of getting to that first 100K. So you might not need to go out and get a rental property right off the bat, but definitely figure out a way to start saving, bump up your Roth IRA, bump up your HSA, get a regular brokerage account, and just focus on getting to $100,000, because once you got that base in place, then you can start more easily moving out into other things. So yeah, I quoted Charlie Munger once again there, because he kind of said the same thing, and I am in 100% agreement. All right, another discussion, credit stacking. So a lot of times we have our small business owners come in here, and they got an idea, they're running low on money, and I guess the comparison is credit stacking versus just going to the bank and getting a loan. So I guess the difference between the two is, I guess ordinarily when people start a business, they may go to a bank and get a line of credit or just flat out borrow some money. And sometimes that's not easy to do. When you have a startup without a lot of history, banks tend to be a little bit reluctant to lend, right? So that's why this credit stacking technique comes into play. So what that basically is first of all, you got to get your personal credit score high. So here, this on one article I mentioned getting to at least 680, and I would say that's probably about the lowest you can go to make any of this stuff work. Typically, I find 700ish is probably where you need to be, but I think we're on the same page here. But you can't come at it with bad personal credit. So if that's your situation, you got to spend some time getting things back in order, getting your utilization low, and if you have any late payments that you get removed from your credit report, look at that kind of thing. But once you got that in place, what you're going to find is that a lot of credit card companies will issue cards to you based on your personal credit score, but in the business name. So once they do that first hard pull on your credit report, they'll issue you a bank, and based on your projected revenue in your company, they'll assign a certain credit line to it, and it might not be a lot at first. You're going to have to build up some history, but you'll find you can get multiple cards, multiple credit lines, and if you work it just right, you will have some money to work with at 0% interest for anywhere between 6 months and 18 months. So, and that can be a lifesaver for a small company that's just getting kind of started, because find cash flow is king. But sometimes it's not easy to dump in, money, deposit money in a checking account and that kind of thing. So this credit stacking technique is what you'll see on a lot of the YouTube channels and whatnot, and it works. I've played around with that a little bit myself, and I find that it's a technique that absolutely can work, and there are plenty of cards and top line cards too. So I'm not talking about these I guess, usurious type, lending companies that have kind of predatory lending. Legit banks, American Express, Chase, BOA, the big banks will do it for you as well. So, and as we know, once we get relationship with these larger banks, then it is easy to go back and get those lines of credits and regular loans and everything else. So this credit stacking is a foot in the door kind of thing. And I guess as always, we got to make sure we got our businesses making money. We're not doing anything dumb once we get these lines, because it can destroy your personal credit if you end up defaulting. But that's something to consider, especially if you're having trouble, with capital. All right, and the last topic for today, for this week, permanent life insurance. So, out of the clients this week, and the past week, going over some things, and he had recently opened a permanent life insurance, and we know that thing can be oversold in some cases. So you got to talk to a professional who knows what they're doing and is not, I guess, incentivized to sell you something you don't need. However, the permanent life insurance policies, a lot of them have this built-in, or maybe it's an additional rider, called an accelerated death benefit. Right? So, when things get bad and your doctor, diagnoses you with something that's life-ending, and it's we have a short, and usually by short I mean 6 months or less life expectancy. If you have one of these good policies in place, they'll give you a certain amount of the death benefit upon receiving this diagnosis. So for in-home care, hospice and things like that, where so you can have some comfort in your last days on the planet here, this accelerated death benefit could be huge, because it's at this point in time, when it's inevitable, I guess you hate to burn through your cash and credit card balances when you can tap into this life insurance benefit a little bit early, make things easier on you to go out on your own terms, and make it easier on your family, and leave you a little bit of death benefit obviously in there for your final expenses and that kind of thing. But another thought, the good policies have it. So permanent life insurance, not always the answer, but it can be an answer. So think it through, talk it through with us if you have questions, and that's that. All right, so my final thoughts for the week here. So I guess one of my best friends' dad, got some bad news. He passed away last on September 10th, a couple Sundays ago, and it just kind of reminded me, I don't know, how hard it is, being a parent today. Because this is a picture of my friend here and with his family. So loves his country, loves Tulane. So we've followed him over the years. And I can just remember my one of the recollections I had of just the wisdom of one of the old men of our friend network here. Talking taxes one day, going through my usual thing there. But as we just talking a little bit, chatting about the personal stuff, at this point in time, I was just saying, man, I got this tuition for the kids coming up. They were talking about trying to do a vacation a few months later, and all this money pressures on, man. So I'm just kind of talking, and him, and he's definitely at a later point in his life where he didn't have to worry about the same stuff anymore, and he just kind of looked at me and smiled, didn't say anything. But I guess that knowing glance, I found it gave me a little bit of comfort, and that I wasn't the only one dealing with this stuff. And just as it's a good man, a good mentor would do, he just kind of without saying much encouraged me. So I always remember that, and I always remember a lot of other good times with the Otilios here. And so it reminded me of another thought here. When a great oak has fallen. So it's a poem I saw a while back, and kind of just reminisces a little bit about how people like that have such an effect on our lives there, and it just kind of never goes away even when they're gone. So I'll just leave that thought with you there about a giant tree falling, and that poem there. And so with that, rest in peace, Mr. Lawrence, and I'll leave that with you. And for everybody else, have a great weekend, and we will see you out here next week.